Welcome to SmithWeekly Discussions, an occasional program for our members of SmithWeekly Research. Please note this program is a private discussion and everything contained herein is for entertainment and educational purposes only. With that, we hope you're in a comfortable position, along with your favorite beverage, to enjoy the discussion. We remind our audience to examine our show notes attached to each of our shows to better understand how our program functions. Before we get into our discussion, we want to say thanks for questions coming from our audience at SmithWeekly, including Paul M., Andy S., Jared W., and Jeff S. Returning guest on the program today, Leif Nilsson is back with us on the program to update. Leif is the Chief Executive Officer of SURG Copper. The company is focused on exploration, advancing a number of various stage projects in British Columbia, Canada, with a focus on the PFS stage Berg Copper Project, which is working towards a PFS. The company also has exploration projects in the same region nearby past producing Huckleberry mine. Serge Copper is listed on the Toronto Venture Exchange under the symbol SURG and also on the US OTC markets under the symbol SRGXF. Leif, welcome back to the podcast.
Thank you very much. Happy to be back here.
Well, Leif, it's good to chat. It's been a while, and of course, it's been a number of years, and we should have had you back for an update earlier, but now you're here, and so great to have you back. And a lot of things have happened at Surge Copper, and of course, the market, as you know, has progressed, and some of the juniors as well. Why don't we kick it off here and talk a little bit about your take on the current status of the copper market, and of course, the sentiment surrounding copper juniors that are focused in Canada, and maybe just even copper juniors generally.
So I think in terms of the big picture macro environment for copper, a lot of the underlying themes that have been, present and known to most investors for the last few years, I think are still very much in place. A lot of them have probably, accelerated a bit, and we've had, at least since I was on this program last, a couple of years ago, we've had some new things that seem to be, additional demand factors for copper. Lots of discussion around the, sort of new technology around AI and large language models and the kind of power resources that those sorts of things look like they're going to be drawing on in the future, and lots of forecasts in terms of what that's all going to imply for energy growth in the future, and of course electrification and copper and things like that. So I mean, I don't have a huge daily focus or interest in what the day-to-day movements in the copper price are doing, but I think looking out over 5, 10, 15, 20 years, all of the huge mega trends that I think most of us in the business are aware of and focused on in terms of electrification of global transportation fleets, overall growth in electricity generation and transmission grids and things like that, urbanization, all these things are, they just continue to move apace and strengthen. And then, I think on the supply side, really hasn't been a lot of changes there either. There's sort of a lack of investment in the business from early stage exploration and onward. Lack of major discoveries. We've had a few interesting ones globally over the last few years. I mean, you probably have some guests on your show that are attached to some of those projects, but some interesting discoveries here and there. But I think questions remain about how the world is going to respond to a big picture need for increasing copper production over the coming decades. So I think the big picture macro thesis is definitely still there. On the equity side of things, I mean, gosh, it's been very challenging markets, as everyone knows, during 2022 and 23 with huge interest rate shock, lots of geopolitical things happening around the world that have caused lots of turbulence and friction among things. And so for those of us running companies in the kind of small cap to micro cap end of the spectrum, it's been challenging to access capital and challenging to get enthusiasm around these sorts of things, even when you've got what you think are pretty relevant and solid projects in the big scheme of things. So Challenging markets for sure, but I think Serge has done a pretty decent job of navigating that over the last couple of years. And we've announced some transactions recently that I think have set us up quite well for the next year or two ahead of us.
Yeah, Leif, thank you for that. And we'll get into some of those discussions here in a moment. But yeah, I think, you and I could probably have a whole separate podcast just to discuss energy and the electrification narrative and, climate and mine supply depletion, anti-mining. I mean, so many things here that play into all these different equations as you sit here and look at this. It's very takes a lot of time and effort to get sorted out, and then also to sift through the false narratives that are out there with respect to these issues as well. Whether it's talking about, again, energy infrastructure, electrification, and how good that can be, EVs, and how good that can be, and the limitations and even the drawbacks of those things, and failing infrastructure. Climate and environmental discussion is another interesting one that has a lot of holes like Swiss cheese poked into it, depending on where you're taking your information from, and of course, how you see the world, and of course, just hard facts and the realities of these things. And then, of course, fossil fuels and how they are with us in our daily lives, and the importance of fossil fuels and the continuity of those fossil fuels. And of course, sentiment on the juniors. Yeah, another one that we could probably talk a lot about. Specific companies being able to be successful, yet valuations are still suppressed, even with good news and progress on projects and all the things that we've got moving forward here. So I really appreciate the comments. As we kind of finish up there, you mentioned you've been able to keep Surge on a fairly good track and be able to weather some of these difficult times. And I would move into capital structure here for just a moment and get a highlight on that. And let's jump into the PEA after that. But talk just a little bit about where we are on shares outstanding, the cash balance, and how far you think that gets you down the road in terms of time, the major shareholders. And with that, I think we should talk about the strategic partner that's come in and helped out, or strategic investor, if you will, that's come in with this company.
Yeah, sure. I might go just backwards there, and so I'll introduce the investment we did, and then I'll talk about the cap structure on a pro forma basis of that. So we in early April announced a strategic investment from a group called African Rainbow Minerals. They go by ARM for short. It's a diversified miner based out of South Africa. They operate a number of mines in a wide range of commodities, from coal to manganese, PGMs, some nickel production, etc. They used to own and operate a copper mine several years ago that was sold, so they don't currently have any copper exposure in their portfolio. They are making an investment into Surge to acquire at closing a 15% interest in the company. The backdrop to that transaction, there was a very long kind of relationship building process behind that. They obviously had access to a data room, and lots of technical due diligence was done by them over many months leading up to this, with a huge focus on our flagship asset, the Berg Project. That financing, as I mentioned, was announced in early April. We are just on the cusp of closing it. I was hoping we would have all that closed before having this conversation, but that's all kind of being worked through at present, so should be all tucked away in the coming days. After announcing that, we also did what we called a sidecar placement. So it was just a normal private placement that was open to market investors, and so that was done for an additional $1 million. So the gross proceeds between those two financings is about $5 million in total. And the messaging around that is that was a funding package that was designed to allow Surge to complete a bunch of PFS level technical work programs that will kind of put the project in a position to be able to crystallize a pre-feasibility study at some point during 2025. So on the cap structure question, pro forma those financings, we will have about 275 million shares outstanding, no warrants, so all equity, no debt in the company, and then there's an additional bit of dilutive securities associated with share compensation plan, that sort of thing. So options, RSUs and DSUs, totaling about 16.5 million on top of the 275. And that's, as I said, so that cash balance of about 5 million will carry the company through a bunch of these work programs, corporate G&A, et cetera, probably for the next 18 months, roughly speaking. And it's pretty similar to how we ran the business for the preceding 18 months. So we did about a $4 million financing in early 2023, and that carried us from that point until basically April of this year. So about a year and a half, so to speak, during which we delivered this PEA on Berg and completed a several thousand meter drill program at Berg and things like that.
Leif, congratulations, first of all, and another congratulations once it closes, but definitely a notable investment here by a reputable group over in South Africa. Appreciate the information on that. And I think that's important there to point out that you guys are essentially budgeting for these funds to get you down the road, get you maybe that 18 months, depending on market conditions, depending on what results, company-specific results come out and how the market reacts to that. Of course, I can see the need potentially to take advantage of potential good conditions to finance and top up as you guys come into PFS readiness, and of course, so I appreciate the comments there. Why don't we shift over here and go right to the preliminary economic assessment, which of course has been out for about a year now, but I think it's good to highlight some of the key items on that PEA for Berg, which did come out last July, if memory serves here. But talk about the key areas of that PEA, and of course, those next steps to get to that PFS pre-feasibility study that is due out in 2025.
This was a maiden PEA for the Berg Project. So this is a deposit that has, got a longer history predating us in terms of prior companies that have drilled a lot of the meterage there and done some metallurgical test work in the past, et cetera. But like a lot of projects in terms of their history, there's a similar tale of, the thing has changed hands through M&A transactions concerning a portfolio of assets, and this particular deposit was always kind of, second or third in the list of those assets, and so it's had previous owners that didn't prioritize the project and that never sort of put the same degree of kind of focus and attention into it as we have. So I think that's part of the reason why it's never had an economic assessment that has been done to the level that we did last year. So there was a lot of work leading up to it, and including a bunch of trade-off studies that we did to think about whether that mineral resource should be looked at from a hub and spoke perspective with other assets and pieces of infrastructure in the district, or whether it should be looked at on a standalone basis. A lot of work leading up to it. Also on the kind of hard data side, we did some additional drilling. We went back to a lot of historical core and re-assayed that for precious metals because a lot of the stuff that was drilled, many decades ago was never assayed for those metals. So a lot of preparatory work to try and optimize or improve the resource database before kind of launching into this. So, and then once we did that, once we sort of tabled the results in June last year, high level numbers that came with a new resource update with a total M&I resource of about 1 billion tons, an additional inferred resource, which sits just sort of below that, of a little over 500 million tons. This is all kind of one large open pit. So the portion of the resources I mentioned that are captured in the PEA mineable inventory is just under 1 billion tons, about a 1.1 strip ratio, pre-production capex of about $2 billion Canadian. And then what you get for that is a 30-year mine life, which produces about 191 million pounds per year of copper equivalent. And so that totals just under 6 billion pounds cumulatively over that 30 years, and a $2.1 billion after-tax NPV8 and 20% after-tax IRR. All those kind of economic numbers are based on a bunch of commodity price assumptions that at the time we sort of pegged as $4 copper, US dollars of course, $15 molybdenum, $1,800 gold, and $23 silver. So those at the time were sort of estimated by us as being pretty reasonable long-term, kind of 30-year long-term commodity prices in 2023 dollars, and I still think we're quite confident in those assessments. So yeah, big picture, this is a pretty simple project. It's a single open pit. There's no kind of complexity around block caves. Very low complexity around infrastructure, which is all important in these types of projects. So lots of stuff out there has aspects of the project where you need to bring huge roads in. Some things need to develop their own power production. Lots of stuff in arid regions of South America have complexity around water. So either the use of salt water in the flow sheet or getting access to production coming out of a desalination plant and pipelines and things like that. Berg is quite a simple project relative to a lot of those things. It's in an area with good infrastructure, so we can drive trucks to our site already. So there's lots of road networks around there. Of course, when the Huckleberry mine adjacent to us operated, they produced the same concentrates that this type of project would produce, and they sent those along on trucks along the existing road networks up to the Trans-Canada Highway and exported those from nearby ports. So all that stuff is there and in place, and there's a few different pretty straightforward options for us to connect into the BC electricity grid, which is like 99% hydropower here. So it's very cheap electricity in British Columbia. The project was designed from first principles to try and electrify as much as possible. And one of the key aspects of that was about a 3.5 kilometer overland conveyor that sits between the pit rim where you've got the crusher and the mill and concentrator. And so, a huge amount of the material movement work and energy expenditure and so forth that would typically be tied up in fleet vehicles going in a round trip route along that line. We've replaced that with an electrically powered overland conveyor, so that strips out a little bit of fleet requirements and obviously lowers some of the kind of energy related costs associated with that, assuming that's driven by grid power. So pretty attractive project in terms of overall simplicity, like lack of risks given where it is in the world and in a pretty well developed part of central BC. And those economic numbers I mentioned, 2.1 billion NPV and 20% IRR at $4 copper, are quite strong. They rank pretty well in the middle of the fairway with a pretty wide selection of peers that we track out there that have done similar studies in recent years.
Leif, thank you for that. That's good. And I want to come back to the peers in a moment, but I wanted to follow up with a few things. First, talk about where we are in recoveries and also how you see some of the additional metallurgical work potentially improving recoveries between PEA now and then, of course, PFS upcoming. Just talk about recoveries and how you think you guys can potentially make improvements there.
In terms of the metals that economic metals that are contemplated to come out of this, as I mentioned, copper, molybdenum, silver, and gold, and that order is roughly is the order of revenue contribution. And then in terms of products and flow sheet, it's very vanilla. Like the flow sheet contemplated here is exactly what's used at most of these types of operations around the world. So you have a sulfide flotation concentrator that concentrates all of these minerals into a bulk concentrate, which has the copper and molybdenum sulfides, and then the gold and silver in there as well. And then a second step is called copper molybdenum separation, and so you separate out the molybdenum from that bulk con into a separate molybdenum con. And then what you're left with is a copper concentrate with the precious metal byproducts. So that's the main product is the copper con, and then the second product is the moly con. So in terms of recoveries, we've got a few different zones of the deposit that have different characteristics and different data sets underpinning the met assumptions. So I won't bore you with the details there, but at a high level, in terms of averages, we assumed kind of low 80% on the copper recovery to high 70% on the molybdenum recovery, mid to high 70s on silver, and then gold, where there was very little historical information. We were kind of the first group to introduced gold into the resource in the first place, and there wasn't any specific historical test work designed around gold recoveries, but there was evidence of saleable grades in the kind of final concentrate products. So we did some analysis around that, but on the recoveries, we're using just sort of a flat 50% there. So I think those numbers are all pretty middle of the fairway to conservative based on the data set that exists for the project. The program that we are launching into presently, we're in the process of kicking off a met program here for Berg. It's going to be focused on really just advancing all those parameters. So again, the flow sheet isn't, we're not trying to reinvent the wheel or design anything new. It's a pretty straightforward flow sheet. We're just looking to get more material that is representative of what a realistic mine plan would look like based on what was designed in the PEA. So material that comes from lots of different areas of the deposit, a wide range of different grades, a wide range of different weathering profiles, etc. So representative of a bunch of different kind of aspects of the deposit, and run a number of tests that are going to advance the knowledge of how that material responds to tweaks in the different variables you have in the flow sheet to hopefully solidify or de-risk our assumptions around those recovery numbers. So none of us are banking on seeing huge upside in those numbers. That's always a possibility, but I think going into these sorts of things, the focus is really to solidify and pin down the assumptions that have been made and the overall kind of design of the flow sheet. But yeah, as I said, those numbers could see marginal improvement as well. That's certainly a possibility.
Right. Yeah, I think it's important to point out, I think the ability to continue to optimize into a DFS as that progresses, I think is, from what we've seen here as a baseline, that there is potential to improve. And of course, any of those improvements wouldn't really be factored in at this point. So good to talk about recoveries and how you're seeing that going. And one of my other, and this will probably starting to come into comparisons, but the first one was the Huckleberry mine is not far away, but it's also has not been restarted either by Imperial. Obviously it's built, it's a different setup for sure, but maybe compared to where Berg is and also Huckleberry, and just maybe from a mining perspective, maybe you can give us a bit of a comparison in terms of maybe advantages or disadvantages between these two, one operation and then one a proposed future operation down the road. But just talk about compare contrast of the deposit, and also I don't know what Huckleberry was on a capex basis, but maybe you can talk about that.
The biggest difference is size. So Huckleberry is a 20,000 ton per day operation, or that's the size of the mill. That's the rate at which it ran when it was in production. What we've designed at Berg for the PEA numbers, it was about 90,000 tons per day. So just under 5 times as large. And the basis for those decisions are driven by unique characteristics of the ore body, as well as financial return metrics, but also just sort of strategic positioning as well. Like, I mean, when we look at when you have a mineral deposit that is going to be exploited by an open pit, there isn't any physical constraint that prevents you from putting a smaller pit or mining it slower at a different rate there. It's not like you're forced to do something a particular size. The economic return math will drive you in a particular direction, but there's also kind of qualitative strategic considerations around what is the market looking for in terms of types of assets. And so our judgment call in that regard was not to shy away from size. I think our perspective is it's hard to build a mine in this day and age, no matter what. And so if you're going to go through the challenges of doing that, bigger is better. It's sort of better to have a long mine life, high output asset that is, capturing meaningful market share if you're going to go down that path. And I think in the macro picture for copper as well, there's reasonable people can disagree about a lot of the narratives embedded in that, as you mentioned at the top. But I think simplistically, the picture over the next couple decades is certainly pointing us in the direction of the world needs more and perhaps many more large-scale copper projects. So that's sort of why we ended up where we did with Berg. On the other comparisons, it's like these things are close enough that they would have very few differences in terms of use of regional infrastructure, what a lot of those aspects would look like. Products are exactly the same, more or less. They've got slightly lower byproduct grades than we have. So when Huckleberry operated, they did produce and sell molybdenum concentrates. It wasn't as large a percentage of the revenue contribution as what we're indicating. Same thing with precious metals. I think there was much lower kind of silver and gold in the resource there. In fact, I don't think they ever estimated gold in the resource, but they did get payable amounts of it in the concentrates when they sold them. So very similar on the flow sheet side of things, open pit mine, et cetera. And then geologically, like all of the porphyry copper systems or porphyry copper deposits in this district we're in are very, very similar. I won't get into I won't get out over my skis in terms of talking about mineral assemblages and things like that, but in a sort of cartoon sense, all these things have very similar configurations where there's a multi-phase porphyry stock and the sort of highest vein density that is hosting all of the copper and moly sulfide minerals is sort of embedded in the wall rock surrounding these stocks. So a lot of the deposits in this area have that kind of ring shape to them or partial ring, where the wall rock that kind of flanks and surrounds a central stock is where the meat of the deposit sits. A lot of the deposits in the area, including Huckleberry, including our stuff at UTSA, have post-mineral faulting that have kind of moved things around a bit. Berg is quite unique in that it has the lowest amount of that. So you see it a lot used as a case study for geophysics for these types of systems because it's so well preserved, and you see this like kind of beautiful ring structure where a lot of imaging systems are able to kind of pick that up quite clearly. So Berg is quite a lot bigger, both aggregate resource wise and conceptual throughput wise than Huckleberry was, but geologically they're quite similar, and product wise, flow sheet wise, infrastructure wise, all basically the same.
Yeah, and I'm not terribly familiar with Huckleberry, but my assumption is it's a scale issue over there. They haven't got exactly excited about doing anything with it yet as far as restart, although in British Columbia and other places, depending. Grade obviously is important and so forth, and a lot of other factors like infrastructure, mining methods, etc. But scale seems to be important in this particular region. With that, I want to just stay on kind of some comparisons for a moment. And I know you've done a lot of work on this, and folks, the audience can refer back over to Serge's website and their documentation there about some of these comparables. One in particular that came to my mind as I was talking with you and thinking about this was the comparable. And of course, I'm sure you've got some comments here that you want to add and some other comparables that I'm probably missing that you can beat me up on, Leif. But one that came to mind for me was how Berg compares to a project like Taseko's Yellowhead.
That would be probably a close comparable. I haven't run the ruler over the numbers from that super recently because I think our approach to looking at a bunch of comps has been focused on very near-term studies. So I think the latest study for Yellowhead and therefore the kind of underlying cost and capex numbers would be from several years ago. But yeah, in terms of overall scale and type of deposit, location in British Columbia, proximity to infrastructure, probably a lot of similarities. Yes. In terms of your comment on Huckleberry about scale, I think the if someone was to ask a question about why they haven't restarted it, of course refer everyone back to the disclosure from that company from Imperial. I'm of course in no way speaking for them, but yeah, they've got like other priorities in their business, and rightly so. They have a 30% interest in Red Chris, where there's a big development sequence going on there for the Block Cave Underground, which is quite a high quality project. And then a couple years ago, when looking at the situation, they had both Huckleberry and Mount Poly as 100% owned care and maintenance status assets. and the same situation was going on with Red Chris. And so when you kind of look at the pecking order between those two things, it's very clear why Mount Poly would be higher in the pecking order than Huckleberry. It's a larger reserve life, a lot more resources that look like they have good prospects for conversion into reserves. So mine life extension, things like that. And that's indeed what's happened. They restarted that mine a couple years ago. They're putting out very interesting exploration results from it. I think it's a pretty high quality project. Huckleberry is I mean, I think if the owner had lots of excess capital and didn't have pecking order decisions about where that capital was going to be allocated in the current copper price environment, they may well decide to restart that. I mean, I think it probably shows pretty decent economics at the types of prices that we're seeing today. It does have, I think, maybe a reserve life, issues around how big those are. So that is maybe the one risk factor that they maybe think about. But I don't think the scale of where it is today is necessarily an impediment. It's roughly similar scale to where Poly and Red Chris operate. So if you were going to build one of these things from scratch today, you might opt to do something significantly bigger. But the history as to why it was built at the scale it was is from decades ago and very different market conditions and a different era, so to speak.
That's good and very good points. And I appreciate you bringing those to my attention because, once again, happy to admit that I'm not familiar with Imperial's operations. So the Yellowhead one's interesting because I know a little bit about Yellowhead for sure. Why don't you help the audience out here with putting another context around maybe one of your more preferred comparables, because you've done a lot of work on this and there's data on your website about this, but talk about maybe a real peer, not because we're talking about productive companies that have cash flows, but maybe a peer that you would say is more comparable to Serge.
I don't want to get too in the weeds on talking about other competitors' projects, but so like one of the things that we've done, which is what you're alluding to, so we've got some interesting data that we've collated and put on a slide on our website. Just looks at what I consider to be the investable universe that's similar to us, because when you think about copper porphyry projects globally and kind of what is in the queue to be built that's going to meet the supply and demand question in the coming years. Of course, the junior mining population is just a subset of that. You've got lots of other projects that are owned by majors or intermediate companies that are part of the equation as well. But those projects are not necessarily directly investable by capital markets participants, and the information around them is maybe lower fidelity as well, because the companies they don't need to necessarily produce updated studies and kind of put all that information in the market. So what I try to focus people on is, if you, as an investor, what exposure does Serge offer you? Well, it's a pretty direct, pure play way to look at a large scale porphyry development project in a good jurisdiction. If you think copper is the right place to be, this is a very vanilla type way to play it. Porphyry deposits are the bread and butter of copper production. More of these things need to and will likely get built, and a lot of them today are in a wide range of different jurisdictions. So when I talk to investors, that's what I try to focus their attention on is these are the types of things that the claim I'm making is the world needs these, and therefore major mining companies are going to be looking to add these things to their pipelines and their portfolios. And so how do we compare to similar things out there that investors can get kind of pure play exposure to? And so in that subset, there's probably a dozen or so projects out there that are at a very similar stage to us, in the sense of being like a single asset junior, a large scale porphyry development project that's at that kind of PEA or PFS stage, and they're actively advancing it. So they've put out a study in the last couple of years where the cost numbers, both in terms of capex and opex, are relatively recent. So they're not sort of pegged before we've seen kind of big inflation wave that has taken place in recent years. Those qualifiers would exclude lots of things out there that are great projects, well-known investable names, but maybe are at the kind of still at the resource delineation phase. So maybe they've made a huge discovery and their older feasibility studies and things like that are not necessarily relevant because they're still kind of trying to define the limits of a big ore deposit. So those are the types of things that I'm excluding from this peer group. So the ones that I am focused on are recent studies, and in that regard, the takeaway is Berg being located in BC is a pretty decent spot compared to lots of other things out there that are in more challenging jurisdictions, either in terms of fiscal regimes, security, or some of the more kind of physical attributes like water challenges in arid regions, things like that. It compares quite well to middle of the fairway in terms of overall size of the mineable inventory of life of mine copper equivalent, mine life, economic numbers that I mentioned. So that kind of 2.1 billion after tax NPV and 20% IRR is sort of right in the middle of the fairway for this investable universe of single asset juniors. And then on things like CapEx, I think when people look at porphyry projects, they're often taken aback by CapEx because maybe they're used to looking at gold projects or things like that tend to be just less complex projects, less complex operations. So in the world of porphyry copper, there isn't a mythical universe of low aggregate capital projects. These things are all multi-billion-dollar projects. The data set that we put forward, I think, demonstrates that. But the other thing, the other lens through which you need to look at that is sort of how do you normalize that capex? So divide it by things like annual copper production capacity, or life of mine recovered copper equivalent, things like that. NPV to capex, any sort of ratio like that. And in that context, I think we're actually quite strongly positioned. So some folks have commented, "Oh, this is a large capex project." Yes, but its peers are also all large capex, and on a relative basis, from a capital intensity perspective, Berg is actually probably on lower than average from that perspective. And then lastly, just sort of market valuation. I think that's the biggest delta for us. Is I think we've had for whatever reason, just a mispricing of what we've put out into the market over the last year. And so from a kind of enterprise value to NPV or enterprise value to copper equivalent contained within the economic study. So those sorts of ratios, huge delta, like multiples between where we are and the median of that peer group. So I know I didn't specifically answer your question on trying to focus on one specific peer, but what I would say is that Berg compares very favorably against a lot of its peers on a range of different financial and technical metrics. But I'd also say the simplicity thing that I mentioned when I was describing the project is a big takeaway. A lot of things out there today, if you get into the details of how the projects are designed and what goes into the physical operations, many things out there, just by the necessity of where they are and the geometry of the ore bodies, have a lot of moving parts, which introduces a lot of execution risk, and lots of ways surprises can crop up down the road. So that's things like sequencing between multiple different deposits, moving into block caves, changes in the processing flow sheets at different times throughout the mine life, using aspects of the mineral processing flow sheet that are maybe less off the shelf than what we're doing. Lots of projects out there around the power side of things, and this could be either trying to lower carbon emission footprint or lower costs, or lots of different reasons for it. But you see lots of projects that have cogeneration features to them, so solar installations or things like that if they're in a arid region with lots of sun, and then water as well. So as I said, in BC, no issues around abundance of freshwater resources. Lots of other areas of the world where that just simply doesn't exist, and the history of drawing water from aquifers is less socially acceptable today than it has been in the past. And so lots of things are having to avail themselves of as I said, saltwater or desal pipelines and things like that. So Berg is very, very, relatively speaking, more technically simple than a lot of peers.
Well, Leif, let's just hope that BC doesn't switch over and say we're going to go 100% solar and wind. I think you and I can agree that would be one hell of a disaster. Appreciate your comments on that bit. This one comes back to scale a little bit. When you look at some of these comparables, and I encourage the audience to do that. I mean, Leaf gives you a comparable sheet to start with, and then you can look up the tech reports of each one of these comparables and some of the other comparables that I mentioned and do some of those comparisons. But assumption again, if you took this down to a 20,000 ton per day operation, not convinced that that is going to work. And also in terms of economics, and also that I think you guys have put forth a PEA. You know, of course, a lot of these things are best foot forward. They always are. But for you guys to demonstrate that this project is on the table for mid-tier and majors. And I think that's the important piece. And of course, you guys will continue to demonstrate that as you move through the PFS process and ultimately the DFS. And then I want to come back to the next piece here and have you make any comments, Leif, about what I said. But we have to talk time frame. It's BC. What do you think at this point would be your view of longer term schedule? And I know this is subjective, Leif, but I want to have you talk about it to advance through, of course, PFS. We know that's coming in 2025. Maybe you can speak to maybe a quarter or two when that might actually happen. And then, of course, the pre-permitting environmental monitoring and data collection, resource category upgrades, of course, you'll be working on. Discussions with parties about financing. Obviously, that'll start to happen post PFS. And then what you would think on DFS timing, potentially, if that's where it goes. And then this is clearly a 2030s type commercial production scenario at this point. That's very subjective as too, but I'd like to get just your thoughts about the overall strategy process and long-term schedule.
That's right. We're not shy about it. I think for long-term planning purposes, people should think about this as an early 2030s type project for reaching a fully permitted status, production decision, and then the PEA contemplated like a 2-year construction timeframe. So if all that kind of is happening in the 2030 timeframe, it's early 2030s for commercial production. So just to be clear, like we haven't necessarily committed to delivering a PFS on any particular timeline. The technical work that we're doing right now is the evergreen data that you need to have in place in order to make kind of PFS leveled assumptions and decisions for an economic study. So we want to get that work done, see what everything looks like before ultimately, catalyzing that. On the back end of a PFS, you also have, I think, more substantial commitments around, as you alluded to, things around environmental baseline, community engagement, various things that are needed to start driving a project through that feasibility and permitting status. And so, again, that's not the type of thing that we would have been capitalized to do a year ago, and market conditions were just completely unsupportive of that sort of thing. So maybe we're a bit shell shocked, I don't know, but we're just sort of trying to get the project thinking one step at a time. Let's sort of move it towards PFS, and we'll just be objective about reading market signals as we go through there and make decisions accordingly. But assuming all that stuff works out and the right sort of signals and support is there, that's sort of the timeline that we've envisioned, is that crystallizing a initial project description and kind of getting into that EA process and broader stakeholder engagement around permitting. There's statutory timelines, and then there's sort of realistic timelines based on historical precedent. And so again, I don't want to be too specific, but we've sort of earmarked that as being a process that would kind of take place in the late 2020s and reaching a successful conclusion if everything is executed well in that kind of early 2030s timeframe.
With that comes market conditions and the unknown nature of the market conditions, Leaf, because if we do have a good sentiment environment and good market conditions in the coming immediate years, then obviously capital could become available to assist in potentially, you can't accelerate everywhere. And some people think sometimes that you can just throw a bunch of people at a problem and somehow it gets solved faster. It's not necessarily true. There's a lot of technical things in there that were missed in that thinking. And then of course, bureaucrat lead time. I mean, good grief. Let's not even start to go down that rabbit hole of some of the clown show and some of the agencies that it takes to get through these permitting processes. That's a different discussion. But just with that as well, I want to ask you this because there's other things that are happening at the company just besides the PFS work. Is there any plans here, Leif, say in 2024, for example, with some of the other exploration projects that the company holds, any other planned work or exploration targets that you think would add value to work on in parallel to the PFS work?
Yeah, for sure. I mean, we always have lots of like a pipeline of targets in the district that are of interest to us, but it has to be prioritized and ranked in the context of treasury and again capital market signals, if you will. But going back to the PFS, there is haven't mentioned this yet, but there is part of the kind of budget that we have now allows us to advance one particular target that we have put out some disclosure on earlier in the year, which we call the Berg Southwest target. It's early stage. It's a lot of kind of surface-based data and work that's been done in the last year, and some historical geophysical data from years prior that have defined a early stage target that sits quite close to the Berg deposit, like on the scale of a couple hundred meters, but it's in the same valley. So it's in the same radius from which, you can easily see how exploration success at this sort of target would be pretty straightforward in terms of having like value accretion to what we've already put forward in the Berg PEA. And all I mean by that is like if the same target was 10 kilometers away over a mountain ridge, clearly the hurdle rate of like what you'd need to discover there if you were successful would be a lot higher for it to be additive. Otherwise, you're kind of looking at it on a standalone basis. Whereas something that's a couple hundred meters away from a center of gravity like the Berg deposit, where we've outlined an economic case already, the hurdle rate is a lot lower. It's something like if you discover something that's higher than the average grade but smaller tonnage, conceivably that could be something that is introduced earlier in a mine sequence. And these are obviously extremely forward-looking, conceptual statements. Like there's no basis yet to even be forecasting this, but I'm trying to give people a sense for how to think about uh, how we would rank a target like that versus something else. So it's in the same valley as the Berg deposit. It's an interesting kind of early stage target. So this year we're going to do some ground truthing, do some additional surface based exploration work early in the season to build up our confidence to make a drill decision. I think a first pass would be nothing huge, a few holes that are a few hundred meters in depth in total. But the benefit of these types of systems is you can usually see from core coming out of the ground whether you're in the right rocks, whether there's mineral potential there, that sort of thing. So in the course of drilling initial holes like that, if you like where you are, you can kind of keep going. You don't necessarily need to finish what you initially planned and then wait a full year to go back there. So we'll see what decision we ultimately make there and what ultimately happens. But that I would say is kind of germane to the PFS work that we're doing because it's a target that sits right next to the resource that we're focused on advancing through PFS. Other stuff in the district, I would say, it's more kind of bigger picture, adding resources to our inventory or progressing earlier stage targets that we don't quite know how they would be figured into a mining scenario yet. Perhaps they're too far away from these centers of gravity of Berg or the kind of situation at UTSA to know exactly how they'd be figured out. So I don't think our budget this year and the market conditions this year necessarily are pushing us in that direction to be chasing after a bunch of those things quite yet.
And Leif, would there be any potential non-core projects that the company would look to either JV out or monetize in order to support the priority targets and, of course, backstop continued funding for Berg? Would there be any potential there? There could be someone listening in here that has a company and is looking to maybe do potential M&A deals on that. Is there anything on that front?
No, not really. I mean, we have all of our mineral claim holdings are one contiguous land package in this district. So, the aspects of it are maybe on the fringe and not super exciting to us, but nonetheless, it's all kind of a part of the one strategically coherent thing. So, I don't think we're necessarily looking at hiving off any of that stuff. As it relates to UTSA, just to refresh folks, that is also a quite advanced mineral resource. It's a couple different deposits called Seal and Ox. We've made some pretty material investments in those deposits over the last few years. We tabled an updated resource statement in 2022 on that project. Just under 500 million tons in the measured and indicated categories, plus some additional inferred material. And those are the deposits that many years ago in 2016 SURG had a preliminary economic assessment that looked at the business case for integrating some subset of the resources there at UTSA into a kind of mine life extension project at Huckleberry. So when Huckleberry's reserves are depleted, is there an opportunity for material to be mined from UTSA and processed at Huckleberry to extend the life of that infrastructure? So for our part, we have advanced those resources. We did some additional metallurgical test work that was also disclosed in 2022 on those projects. So we certainly advanced them. There isn't any intention in the near term for us to rework any kind of economic study for public consumption. There's some work we've done in the background to advance some of the engineering design concepts there. The next logical step for that project is really a little bit dependent on what Imperial decides to do with Huckleberry. So to answer your question about do we want to JV anything, not in the context of selling some subset of our projects to another junior, but is there some relevant transaction, catalyzing transaction for UTSA involving other stuff in that district? Yeah, potentially, and we're obviously very kind of keenly following all of that. And then lastly, on the non-core piece of things, we do own a small royalty on some ground in the Blackwater district that Artemis are obviously building. Early stage ground, not part of the reserve base or anything like that. So I wouldn't get anyone too worked up on it. But as always, when you've got a mine that goes into construction, the operator immediately starts turning their attention to drilling targets in the periphery to try and increase the mine life and just sort of build the base there. So we're certainly hopeful that in the coming years, there's maybe some additional exploration that takes place on those what they're called the Aura concessions or Oro concessions, but potentially there's some additional exploration attention that gets paid on those claims, and we own a 2% NSR there. So that would certainly be non-core to what we're doing in the Berg and UTSA district.
Leif, thank you for that. It's always good to get that information just in case someone has interest there or there's any potential opportunities there. It's just to finish up here as you wrap up, and I appreciate the time. Lots of stuff to catch up on, of course, and thanks for sticking with us. Local community and government relations, British Columbia, you have some various parties there that you have to take care of and work with and help educate and help them understand copper and the importance of that, and obviously the economic benefits and the fact that mining and energy of these things are absolutely necessities. Just talk about the community efforts that you're doing there at the company as this progresses. Obviously, that's going to ramp up as this company gets nearer and nearer towards that DFS and towards financing and those types of things in the future, and as the company gets larger. But just talk about what you're doing presently on that front to obtain community acceptance of the project, continuing to work with the local and even federal governments on this project.
Yeah, so on the community stakeholder side of things, we have like many places in Canada and BC in particular, we have multiple Indigenous nations that have kind of title interests where we are. And at the risk of oversimplifying, for us, it tends to consolidate to interaction with a few different groups. So the Cheslata Carrier Nation and a couple different groups that fall into the Wet'suwet'en Nation. So the refer to them as the OW and the Wet'suwet'en First Nation. And so, in terms of engagement efforts with those organizations, it's pretty straightforward stuff. It's like a lot of communication, a lot of keeping their leaders and their representatives informed about what we're doing and trying to get them involved in project design choices from the earliest stages. And then on an annual basis, it's also economic development opportunities around choosing contractors when we are running camps and running our exploration program, choosing contractors that are kind of part of those communities or have kind of direct, development, shared development initiatives with those communities, directly hiring people from those communities. So those are kind of ongoing annual efforts that we are always making, and these are never things that come to some sort of apex and you reach some conclusion. It's part of doing business. It's something that is an ever-present aspect of mineral development. So I think the status of our relationships with those communities and the community leaders are quite good. It's a lot of pretty positive engagement there. And then in terms of the different levels of government, from local to provincial to federal, I think the what could be said there is and this stuff is like in the news all the time. There seems to be a pretty pleasing recognition at all levels of government that critical minerals are a necessity for modern life and for the kind of direction that we want to take our economies and society in the coming decades. And so I don't feel like we come up against a lot of resistance to that, partly because Canada and BC is a world class mining jurisdiction. Like, lots of people there work in the industry and know all about how it works and its benefits and all that. So yeah, there's lots of different touch points we have with various ministries at both the provincial and federal level that are kind of what you'd expect or what you'd hope for them to look like. So, and I think all of that will translate in the coming years to hopefully more accelerated or more straightforward timelines as it relates to things like permitting. So that's always a huge risk for this industry in a place like Canada, is that the timelines for permitting big projects have often just been much longer than what you'd hope for or what the minimum statutory guidelines would suggest. And I think there's going to be hopefully lots of efforts at all levels of government to try and remove some of those barriers as it relates to projects that are considered to be strategically important as it relates to critical minerals, which we think Berg and the district that we operate in as a whole is certainly high on that list, given its size, given it's not in some remote part of the province, and the metals that we are looking to produce over many decades are things like copper and molybdenum, and they're just absolutely essential for all of the technologies that people care about for the future.
The basics is look, you can have a permitting process that is prompt and expedited and also maintains quality. Period. I don't care how you cut it. You can do that. It can be done. And everybody should have the right to present their application and their case for a permit. Everybody. This whole make it up as you go along and let's just kick the can down the road, and the bureaucratic nature of some of this is it's just laughable. And of course, it varies by province. It varies by, in the case of the U.S., state, federal. It varies by country. So it's always interesting to observe some of these things, and a lot of it you have to shake your head at. We hope it improves and goes the other direction, I hope. But really appreciate your comments on that, some of the work you're doing, and of course the early efforts, because it takes so much efforts and early efforts to get down the road, and all this work ahead of time to help the pathway smooth out as you get closer to those bigger financial commitments and permitting acceptance and all those other things that we have coming down the pipe. Well, Leif, why don't we leave it here? We'll finish up, and thanks again for the updates. Good conversation. Any final comments? But I'll leave you with this as a final question. For potential investors who are listening in, the company has a market capitalization of about 42 million Canadian dollars here. Why should Serge Copper be considered within the institutional, family office, and retail investors portfolio at this stage?
From a quality perspective, we're in a great part of the world. We've got the right metal mix and scale of assets that are relevant to bigger mining companies out there that should want to develop these things. We've attracted already a strategic investor in a diversified mining company called ARM. And so I think we're at the right sort of stage in terms of timing of project development with the positive direction that the copper market is heading over the next couple of years, and so should have some very relevant, interesting catalysts that are hopefully value accretive as we do that. And on the valuation front, it's a very transparently kind of a cheap equity, so to speak. Clean balance sheet, what you see is what you get, but on a relative basis, when you look at what we have compared to lots of other investable opportunities out there, we are certainly among the cheapest through that lens. So I think represents a very compelling investment opportunity to the types of investors that you've mentioned, who can understand the business, can understand the types of risks and challenges that we face, and the timelines associated with completing the tasks at hand in order to surface and crystallize the value that we're working towards.
And Leif, what is the best way for interested parties to reach out to you and the company?
info@surgecopper.com is a general inbox that the right stuff will get to my attention. Similarly, you can call the number on our website and get in touch that way. And then I'm personally on LinkedIn, and the company maintains both LinkedIn and Twitter/X profiles that are other channels in which we put out relevant updates and news items, and folks are welcome to get in touch through those channels as well.
Leif, really appreciate you coming on to take the time to update on Serge Copper, and we look forward to, of course, following this going forward, and of course, looking forward to having you come back in the coming months to update. Thank you for the time.
Thank you very much. Have a good one.